Well, big question for this week is what to do about the euro after the ECB goes to negative rates. What does that mean for the currency pair, and how best do we trade it? We've also got a whole bunch of patterns setting up this week, and I'm also going to talk to you about a couple of structured trades that I think have a pretty good shot at next week at yielding us some nice returns. All that on more, and all that and more on this edition of the Forex Market Preview. Well, welcome back, everybody. Thank you so much for being here. My name is Jason Stapleton, and this is the Forex Market Preview on a very hot Saturday here in Kansas City. And we're going to be talking today a little bit about the euro and what happened there and what we can do now. We got a lot to talk about today, so let's get right into it. European Central Bank cut interest rates into the negatives. And that doesn't mean what you think it means, probably, if you don't follow this regularly. It doesn't mean that you can now borrow money and someone will pay you for that. What they did was they basically started charging banks to hold their money at the European Central Bank. And the goal there is to push money out into the market and get it lending. They also lowered the rates that banks can lend at, making capital a little bit freer. And what they're hoping is that they will turn around and push that capital back out into Joe Mom and Pop on the street, who are trying to get home loans and car loans and business loans and all of those types of things. Is it going to work? Maybe in the short run, it might. I don't think it's. I don't think that the actual policy itself has a lot of hope. But here's the important thing: is what to do about the euro. How are we going to trade this? So let's take a look over here on the euro chart, because here's what happened. And people will say, oh, it wasn't as much as expected, so there was a rally, and that's why the rally came in, and that's absolutely, in my opinion, nothing but guessing. And I'm going to give a little guess here as to what I think happened, but I think everybody was expecting exactly what happened to happen. And they all had set up, and we had seen just heavy selling pressure, just steady, constantly, all the way up from, the highs here at around 140. We saw a decline from 140 without a single relief, all the way down to 135, all the way down, well, as soon as the news hit, all the way down to 135s. So 500 pip directional move. And at the end of that move, then the market started buying up. And I'm convinced that this was a, what do you call it, buy the hype, sell the news. Or in this case, sell the hype, buy the news, because we're looking at it the opposite direction. But the bottom line is here that the euro has rallied, and then into Friday, we kind of had a little down day, a little profit taking on there likely. But this is the level that I want to watch. This is what I have been watching for the last several days, and this is the level I'm going to suggest, the 137s level. 137, we traded around this level when it came down in there and tried to get a little bit of a rally out of it. Couldn't get much of a rally at 137s, and then the market declined again. And when we get back up into that level, I think this is going to be, we're going to be looking for short opportunities at the 137 handle. The reason for that is because even though the market rallied after this news, this is actually fundamentally bearish information for the euro. And I think that the market started pricing that in back here at around 39.30s, 39.50s. And that's what we've seen all this time as bearish. So this is the relief rally that I expected at 37s. It's come now, down here after the news event. And I think we will continue to see some upside up into 37s, because that's going to be the area that most people are going to be watching for selling opportunities. So keep an eye on that as we go into next week as a key area. So what we would do is in the syndicate is I would take a look at this. If we came up into 37s, I would drop down to a trading time frame, say a 60-minute time frame, and I would look for entry signals, double tops, pin bars, anything like that would give me some semblance that the market may be looking for a reversal. And then I would look at taking a short position there. So that's what we'll be doing into this week. Let's take a look at the Japanese yen. This is one, guys, I said last week, I told you guys in the Forex Market Preview, we were trading down here around 101.70s, and I said, I think this looks like a pretty good buy. I think this market's going higher. And sure enough, boom, the market opens gaps up just a little bit. We don't quite fill the gap, and then boom, the market takes off. We're off to the races. And we went up all day, and then out of nowhere, back up against this structure level, we ended up hitting a little bit of a snag, and the market reversed. Now, there's actually a pattern formation in here for those of you guys who are pattern traders. Let me show it to you. Let me get the right pattern tool here. X to A to B, B to C, and C to D comes in at the 786, which is going to be somewhere around there, I believe. Let me grab a Fibonacci retracement to show it to you. Yep, right there at the 786. 102.54s. That was the short. And we'll take a look at it with the Constellation software here in a minute, but this is basically a sell, and we almost hit target 1. Bringing that Fibonacci retracement in, swing low to swing high. Almost hit target 1. We're about 10 pips away from hitting the initial targets here at around 102.02. But we didn't quite get there yesterday, and we'll have to wait and see what the market gives us into next week. There's a nice structure level. If the market will rally back up into this structure level again into next week, we may actually have a selling opportunity again based on structure into that double top area. So we'll watch that resistance level as well. New Zealand dollar made a nice chunk of change on this on Friday. Those of you guys who are Syndicate members, I sold this thing back up at 85.33s. You guys were there when we talked about it. And I said I'm expecting this market to decline, and if I can get 30 or 40 pips out of this market and be able to exit this trade for some profit without holding over the weekend, I think I'll probably do that. I think those were my exact words, as a matter of fact. And that, in fact, did happen. I pulled about 30 pips out of the market. It did exactly what I thought it was going to do, and this is still a very bearish signal. What I'm going to be watching for into next week is a little bit of a rally here as we come up and we retest these levels one more time. If I go down to the hourly chart, just let me take a look at it. So we ended on a low note. We're going to come down into, 84, 82s, and we may get a pop back up a little bit higher, back up into 85.20s or so. And a move to 85.20s would be a nice sell again, because we're going to almost get a double top there, and it'll give me another shorting opportunity. I don't want to just short it right at the open, because oftentimes what we see is on a down day like this with a big wick is we see the market kind of relief again. We get a little bit of a press higher before the market turns around. So 85.20 somewhere in there. That'd be right up against the edge of that structure level looking left. You guys can see that 85. Let me just do 85.20s, somewhere like there. See how we're clipping the top of that? It's not all the way up there at 85.33s, but it's a nice area to look to short. So if the market can get back up there, probably look to short this thing again for some continued downside move. The New Zealand dollar has been very bearish, strongly bearish, as opposed to the other dollar currency pairs. This little relief pop, I think, was just a relief rally back up into that structure level, and we're likely to see some more downside. Probably 83.74s. I think that's pretty reasonable, because at 83.74s you can see what comes in there. 83.70s. Look at the structure that exists there. 1, 2, 3, 4, 5 levels there. So that's certainly something that, you got a lot of opportunity, a lot of downside opportunity there. Let's click over. I think that's all I want to look at on structurally. Let's look at some of the pattern stuff that we've got. As I said, dollar-yen, there's the cipher pattern that completed. Constellation picked that up perfectly. 102.54 is the exact same level that we looked at on the chart. Nice shorting area there, and we'll see if we can get some more downside continuation on that. Aussie yen's got a trade here, but it's a ways off. We've got this cipher pattern completion, and also a bat pattern completion here as well. 190.78's on the bat, and 90 even handle for the cipher pattern, but that's got a ways to go. So there's not really any point in messing around with that right now. Euro-yen almost filled. You guys remember we talked about this. We've been watching this in the Syndicate for quite a while. We came down in 137.96s. The entries were 137.84. So even if you front run your orders by 3 or 4 pips, you still didn't have enough to get filled at 95s. We've rallied out of that a little bit, but this is still a valid trading opportunity if we can come back down in and clip these. And also we've got this in purple here. We've got a bat pattern a little bit deeper at 137s. So keep an eye on both of those as we move into next week. Let me check Canada. I think USD Canada had a nice trade on it too. Yep. USD Canada got a nice bat pattern here coming in $1.10, 1.102. I never quite know how to say it with Canada. 1025s basically as a shorting opportunity, and that is right back up against that structure level. So it'd be a decent area to short if we can see some continuation out of this move. And Canada has been in, just in kind of an area of consolidation here for quite some time. The overall move is bullish. So we will we'll see if it comes up into that resistance level. It'll be a key level to see whether or not we're going to hold the short-term bearish sentiment that we have, or if we're going to continue higher into more of a bullish sentiment or continuation of the bullish trend. Let's take a look at, what was the one? I had one more in here that I wanted to look at. Pound New Zealand? Was that it? Yeah, Pound New Zealand's got a bat pattern as well. So again, $2.02. Basically 0275s for shorts on Pound New Zealand on the daily chart. These are daily chart deals, but we can just as easily drop down to a 60-minute chart or a 15-minute chart or a 5-minute chart and do this exact same thing. The one thing that Constellation allows you to do, the software allows you to do, is just quickly cycle through those charts, because it allows you to pick up all the patterns that are out there and not have to go hunt for them with your eye. So it's a really, really nice tool to have in your toolbox. That is just about it that I've got for this week. Now, if you like this, if you want to join the Syndicate and you want to get involved with me on a daily basis, I do a live show every single morning. We spend about 15-20 minutes every day going through the charts. And then, of course, you get access to the trade floor software where we put out our trades and our ideas. It's a great opportunity for you to come in and experience kind of on a day-to-day basis what we're doing and get a feel for that. And so you can do that by just going to the link underneath this video or in the About section on the YouTube page, and it'll give you a link to take you over there to do that. That's it, guys. That's it for this week. So until next time, good luck, good trading. Talk to you guys soon.